Let's bring in Scott Bauer, CEO of Prosper Trading Academy, to help set up the action today. Scott, it's good to see you. I haven't chatted with you in a little while on air. So let's get into your big picture take for equity markets. Does the weakness surprise you at all or no?
No, especially coming off a long weekend here, and given that we've got U.S.-Iran talks, we've got more inflation data later this week with PCE, with still some earnings, and then the announcement at the end of last week that we may see something out of the Supreme Court as early as Friday about the tariff situation. I think that's all a recipe for some heightened volatility right now.
Scott, it feels like the can keeps getting kicked down the road with regard to the Supreme Court and a decision on tariffs. How much does that matter this week, or what matters the most from your point of view? Is it about PCE? Is it about, some of the sprinkles of earnings that we have left? What's your take?
I do think it's PCE, at least for the immediate reaction. Is that going to, kind of reinforce the CPI data that we saw last week, or is going to show something completely different? Because the CPI data that we got, albeit not, I wouldn't say fantastic, was probably one of the bright shining lights of data that the market has received over the last several weeks. So, if we can get something to reinforce that, great. So I think that would be the more immediate kind of, effect on the markets. The tariff situation, I'm not really sure how the market is going to take that, other than that there is some pent up volatility for that. If the Supreme Court strikes it down, the overriding theme is that that'll be a negative for the markets, but I'm not so sure.
So let me ask you this. I'm glad you mentioned the CPI number because that was better than expected. The jobs report recently was also better than expected. What's the interpretation now? Is good news bad? Is that the read-through?
Yeah, it could be one of those situations that we're in right now. And, when we talk about those jobs numbers, sure, the overall number was better, but then you look at those revisions that were the largest, downward revisions that we've seen in over 20 years with jobs down 1 million as the revision over last year. So I think that the market right now is very finicky, very picky. We're not sure how this data is going to be interpreted. So far, over the last couple of weeks, the data that's come out has led to the 10-year and rates really, really retreating. I mean, it was just a week or two ago, we saw that 10-year pushing 4.3%. And now we're almost at a point where we're about to see a 3 handle in front.
Which is wild. Let's talk about the move that we're watching in metals. You've got pressure on gold, silver, and copper this morning. Gold sitting at about the lowest level in about a week. We're 49.53-ish right now. What's your take on what's happening in metals?
I still think it is a buy the dip sort of arena that we're in with gold and silver. Not as severe as it has been over the last year, but I think that any uncertainty that causes a 1, 2, 3% pullback, something similar to what we're seeing this morning here, I do think that is just on a trading basis buy the dip. For the longest time, Diane, we saw this trade be almost like meme stocks, right? The craze over it, the fundamentals, if you will, behind, what was driving these prices were just ridiculous, absolutely ridiculous. So I think that the precious metals are still finding their footing. Obviously, a lot depends on where rates are going and the dollar, but to me, it is still a buy the dip.
Okay, and then let's talk about the move we're watching in crude oil. Crude oil a little higher this morning, trading above $63 an ounce for West Texas Intermediate, up about 1.25% here. Is this all tied to the U.S. and Iran talks?
It absolutely is, because you talk about being buy the dip in gold and silver. If it weren't for the tension between U.S., Iran, and the talks that are going on right now, I think that we would see prices probably $5 to $7 a barrel lower than where they are right now. So, without, and let's hope this doesn't happen, without any full-blown escalation here, I really believe that this is still a sell the rip opposite of what we're seeing in the precious metals space.
So this is a sell the rip. So are you in the camp that believes we're going to be in a narrow range once again this year, like last year?
Without any big geopolitical event, absolutely. And I think it's a sell opportunity. So any rally that we see, at least till the fundamentals of supply and demand change, which really haven't. Maybe they've shifted a little bit off of massive oversupply, and maybe there's a little bit more demand now. But I still think when it comes down to basic economics, yes, unless we see some big major geopolitical event, yes, I believe that to be the case.
All right, we'll leave our conversation there for now. Thank you, Scott. That's Scott Bauer, CEO of Prosper
Thanks,
Trading Academy. We appreciate you kicking off the shortened trading week with us.